we have released our top 50 B2B marketplace ranking. And one of the companies in the top 50, actually both of these companies were in the top 50. And both of them have had material fundraisers since that ranking came out. One's in the chemical space, one is in the metal space. What's interesting, though, about both of these raises is they are some of the bigger raises with B2B marketplaces for heavy goods, right? Whereas a lot of the B2B marketplaces to date have been able, aren't as industrial and kind of hyper localized type of network effects that comes with these, when you're just transporting and fulfilling chemicals or metal in these two instances. So why don't we talk about, this raise here with Knowde?
I think it was a $72 million round from Knowde that was announced earlier this week. And the criticism of Knowde historically from some of the folks in the industry has been, well, they're not really consecrating the transaction. That's kind of it's just a lead gen service is some of the criticism I've heard. But I think now with this raise, they're going to start moving into, and they've said this kind of publicly, invoice financing, actually helping with the payment and we would presume eventually the logistics and other things around the transaction as well. So it's really starting to get to that kind of end-to-end marketplace experience. They've got a lot of scale. Based on how much money you'd raise, you'd think they're doing in the kind of mid to high hundreds of millions of GMV. They're really kind of the leading in terms, at least of scale, marketplace in the US right now. There's a number of others that are competing with them, a little bit smaller, have some different business models behind them. But Knowde has really kind of established a leadership position here. And I think the other very interesting thing that you talk about they do is product data. And this is a big theme as we talk about B2B marketplaces, at Applico and on Winner Take All is this need to solve these product data challenges in e-commerce and B2B generally, but particularly for marketplaces. That you need photos, you need dimensions, you need to make sure that when you call this product X, that it's also described by X by other people, and if they use a different name, you got to be able to match that up. And historically in the chemical industry, that's super opaque. A lot of this information, product information, it's in PDFs and physical catalogs and other things that aren't easily accessible, e-commerce ready digital information. And Knowde has really done a very good job of kind of digitizing that and sort of creating this product catalog for the industry. And that's been a big part of their success.
Yeah. So a couple of points there. I mean, one, what they've really done at the onset is really go direct to the supplier, to the manufacturer, right? A lot of these B2B marketplaces in the early days tend to get initial supply from, third-party sellers, smaller distributors. I feel like they've had a big emphasis on really going direct to the supplier, getting folks like DuPont in here, 3M, and really large suppliers even prior to this big $72 million fundraise. That seems pretty interesting. And to your point, they wouldn't have been able to get these suppliers on board if they weren't able to solve key challenges that the suppliers were encountering, like product data. In the industry, they might receive some criticism to say, oh, well, how are they going to make any money? Which is the common criticism against marketplaces and tech startups these days. However, if the marketplace is able to disintermediate the incumbent by solving some challenges, in this case for suppliers, it's kind of theirs to lose, they being the marketplace, to figure out how to monetize. And their path here for monetization reminds me of more of like an Alibaba type of model where, they have a much looser control over the end-to-end transaction in the early days. And what did Alibaba do with what eventually became Ant Financial, but in the early days was just providing really escrow services, because you were buying and selling, you were transacting between buyer and seller, business customer and say manufacturer on Alibaba in the early days in China. But Alibaba would give you, hey, here's the contact information, call them up if you want. Oh, and if you want to use our escrow service to transact, well, here's a nice little value-added service, right? So it's these kind of small incremental value-added services that over time make that transaction much stickier, allow the marketplace to transact. And maybe, as we saw with Alibaba, maybe more of an advertising type of business model is in Knowde's future, as opposed to the more traditional kind of take rate model, which you tend to see more often in the US versus China's been more heavily kind of ad and value added services driven. Any indication about if that's their trajectory, or how does that check out to you?
Yeah, I think there's a lot of similarities there in their approach to what you described from Alibaba. One is that much like Alibaba does, for big brands in China on Tmall, they kind of enable you to, as a chemical producer, to create a storefront for your product. So that's a big value prop here. Is basically we'll help you host your own e-commerce store. You can direct your own customers to it. We'll help you with your digital marketing, and by the way, we'll enable real-time conversations and engagement with your customers through Knowde. So very much like Alibaba did in China, where part of the issue was kind of the trust issue in the sale, and it was more complicated than just Amazon where you click the button. They enable you to talk to the seller, and that becomes hard in that model to then charge a meaningful take rate, because then you've already talked with the seller. You can just take the transaction offline after you've gotten the introduction. So I think something like that, where they monetize via a lot of value-added services, potentially advertising and other kinds of things around the transaction analytics, for example, I think makes sense as a path there, just given how they position themselves and the value they provide.
So it was a great raise, $72 million. Code 2 led it, a pretty big size firm. Post money, they have over $500 million valuation now. There was one wonky thing I was looking at when I was looking at the investors, and I've now seen this validated on 2 different sites that list out the investors, but it lists the Chainsmokers as an investor. And any music fans out there, Chainsmokers is a band. You go to the website listed as the investor website, so here's Chainsmokers on Crunchbase, and it says, go Chainsmokers, an electronic DJ and production. It's got to be a miss, but I've now seen it both on Crunchbase and PitchBook.
One of the VCs from the press release, I think it's called Mantis VC, it says in partnership with the Chainsmokers. So I'm guessing they're one of their prominent LPs or something to that effect at Mantis VC.
I mean, that's hilarious.
An interesting wrinkle. I hope they have a good theme song over at Knowde.
Well, but here's my point, right? Like, you are, you look at their investors, right? These are all really VCs. FJ has invested in them. There's an angel. And then you have the Chainsmokers. Where are the strategics, right? There's no suppliers in here, right? If you are DuPont, and there's no strategics putting money into this thing, and it's not to say that a DuPont doesn't have the ability to say, we want to put money in, or we're not going to give you our products. Knowde does not have that amount of leverage to turn that down. That wouldn't alienate other suppliers, but DuPont probably wants to say, hey, I want some extra data. Hey, give me a little extra preferential treatment. You already have over 2,000 suppliers. Doesn't mean that, these other suppliers are not going to join. I just find it very surprising that the Chainsmokers have invested in this thing and no strategics. It just seems like a big miss to me.
Yeah, I think there's definitely a big opportunity for strategics to get on the marketplace train in chemicals. I think there's been a little bit more hesitancy in the industry than we've seen in some other ones, like food, auto parts, industrials, where we've seen a little bit more strategic activity. It wouldn't surprise me if that changes very soon, though.
Okay, so the next kind of industrial B2B marketplace that raised is this marketplace called Rebus. And so Rebus is a metal marketplace, and really where they got their initial start was transacting actually, not small quantities of metal, actually larger quantities of metal many oftentimes latent inventory, going unused, unsold. So Rebus's model is a little bit different than some of the other B2B marketplaces, especially Knowde, but even some of the other metal B2B marketplaces, which is the buyer and the seller actually have no visibility into who each other are, right? Actually, the complete opposite of Knowde. So Rebus is actually, their margin is saying, hey, I found a seller. They got some extra metal. It's not moving. They want to move it. I've got a price from the seller. Now, if I can find a buyer, I keep the spread, right? I being Rebus. And so that's actually somewhat different to see. Curious how that's, why that's, now made them the B2B marketplace in metal that has raised easily the most amount of money. This fundraise, they raised another $20 million, which put them at a total of raising $26 million. One of the easy differences between chemical and metal is, a lot of these chemical shipments are kind of made to order. Chemicals are being mixed, right? They're purchased for, and then the product you're buying is put together for a specific application. The metal, you have a lot of work that you can do to the metal, but I guess it has more reusability than say these chemical orders or something to that effect. What do you make of that, Nick?
Yeah, it probably depends on what part of the chemical industry you're talking about. There's some stuff that is very commoditized. Then there's more kind of the specialty stuff, which is more of a kind of consultative sale in many cases. I think in metal, the equivalent would be, kind of the service center component where you're cutting or doing particular things to the metal, treating it in certain ways. And then that kind of value-added service component that the service center provides would be kind of the analogy there. But I think there is also a lot of stuff in metal that's, it's just stock holding. It's, okay, these are the sheets, and then we sell the sheets, and, very much kind of a commoditized part of the industry. I think that the reason, and I've seen a similar model from some smaller startups in the chemical space, the reason for the kind of anonymity here is on the supplier side, if you're selling excess inventory, for example, at a discount, you don't want to, kind of anger some of your existing customers that might be like, well, you've sold that to me at, a higher price. So maybe you sell it and it's only revealed, who the buyer and seller is when you consecrate the transaction. So that you're not publishing your prices on the internet. It's more of it's a different experience than kind of the Amazon model. It's one that's kind of fit to solve this particular challenge of, how are you moving around excess inventory, but doing it without kind of channel disruption or cannibalizing the core business.
Two really good points there. One, they're probably selling a lot of metal before the service center is actually doing anything to it, right? They have the metal, kind of the stock holding metal. They've processed some of it for a certain subset of customers, but now they've got a chunk of this that's just laying around. What do we do with it? And then the other thing is that I think, what you find a lot in the metal industry is, and many B2B industries, is the concept of these kind of buyouts and stockouts. And so I would imagine that probably, a decent amount of Rebus's volume is selling distributor to distributor or service center to service center. And I would imagine if you're selling, there could actually be some reticence on behalf of either buyer or possibly both buyer and seller to disclose who's actually on the other side of this. Or if you're selling it and you're selling it at a discount because it's laying around, or you want the cash, you want to keep the product moving, you want to keep your turnover ratios down, then, you don't really want your name on it. So it's kind of interesting how the anonymity is lending itself to their core transaction. But very interesting to see really two completely different ends of the spectrum in terms of both platform businesses, both B2B marketplaces, completely different structure of core transaction and how the marketplaces operate to connect buyer and seller.
I think with Rebus, that stock out model that you described is definitely a core factor here. And I can tell you how I know. If you look on their buyer page, if you scroll to the bottom, it says, we can sell for you too. And if you go to the buy page, it says, we can So the buy page says we can sell for you too, and the sell page says we can also buy for you. So it's catering in a way that you wouldn't see on many marketplaces, under the assumption that if you operate on the buy side, you probably can also operate on the sell side, which just screams stockouts, distributors, both buy and sell. That's really who that's catering to. And that's definitely unusual to see that on a B2B marketplace.
Yeah, and actually, it's in their chart. Service centers on the buy side, service centers on the sell side. Large OEMs are on both sides. It's just one big circle. They're just helping everyone sell and buy from each other. The only ones that aren't on the buy side are the producers, which, yes, that would make some sense. I would hope that the mills aren't buying finished product from other players, but just about everyone else is duplicate on both the buy and sell side. So, yeah, very interesting model, very specific to how these industries are operating, and where, the one thing I would just say is that although this is where these marketplaces are starting, right, where Knowde has gotten some, backlash kind of in the industry, as you were mentioning, it doesn't, where they start doesn't dictate where they end up, right? Where they start is a foundation that then they can use to grow, to then raise more money, to subsidize more value, to capture more of the actual core transaction or monetize. It's by no mean really boxing them in to a specific model, right? I wouldn't say Rebus could use this and could easily start to, not easily, but if they wanted to, as you start to solve more product data challenges, as you start to give more technology to solve buyer and seller challenges, you could start to move into other transaction models. It's very common for marketplaces to actually have multiple types of core transactions. You got to get to a certain level of scale because that takes a lot of resources, and you just need the volume to justify that. But I wouldn't be surprised to see both of these businesses look very different in a year or two or three from now.
The classic example there is eBay. They started doing auctions, and then now a big chunk, or I think most of their business, goes through instant buy, right? The buy now option. I think you've seen some marketplaces, particularly European ones like Pinpools and Commandus, have kind of this buy now option. Well, some suppliers will list price, and it's definitely a minority of suppliers, but they'll list price for things you can buy now. You don't have to go through this kind of quote RFP process. Once you start doing as a marketplace, they're now probably in the hundreds of millions if you're talking about Knowde. Once you start doing a few billion in scale, then all of a sudden you've got a little bit more to play with, and you can probably start to convince some of those suppliers to open up those prices and put them on the marketplace. And maybe that introduces a new transaction model. So there's definitely room there for these marketplaces to evolve. We've seen this happen many times, and I would be surprised if it didn't happen here.